building.
TB from the SIP.
And we have a special broadcast today.
Yeah.
Before we get into the broadcast, first, let me get into the sponsors. Shout out to New Orleans Daiquiris to Go on 9441 Cullen Boulevard in the Sunnyside area in Houston. If you ever pop up in Houston, if you need a nice little beverage, it's holiday time. They got specials going on. Make sure you go over there to New Orleans Daiquiris to Go on 9441 Cullen. Hit them guys up. Tell them DJ KO sent you. They're going to hook you up.
Can they twerking now?
I don't know. That's a whole another conversation right there. So we have a special guest today. These kind of podcasts, this is what I normally listen to on a normal basis, where I can learn something from, you know what I'm saying? And the brother that we have today, he's I'm going to say a guru, a kind of a guru of what he does. He's an alumni, HBCU grad. I'm going to let him tell his story, but he's very inspirational to a lot of people that's in that real estate field that want to get into investing and developing and talking about just stuff around different cities. Today, everybody, welcome to the show, Mr. Chris Senegal.
Hey, Chris.
Thank you.
So, Chris, before we even get started, you can tell the people a little bit about yourself and what you do.
Yeah, so Christopher Senegal, born in Lake Charles, Louisiana. Graduated from the Southern University.
Amen.
College.
Amen.
Yeah, went to school for engineering, got out, and got that good corporate job working for the railroad. And felt like I was sold a dream in the first year. So I just kind of wanted to hit reset, man, and just started reading books and found real estate. Kept saying real estate was where a lot of first generation wealth was created. So that's the path I took. Read Rich Dad Poor Dad, and another book called Think and Grow Rich, and that just kind of set me on that path of, man, just think differently about everything.
Okay.
You know?
Great books.
Yeah.
So how did you get started into real estate? Like the very first thing, because I know people, they say when they leave, like you said, that corporate job making $100,000, $200,000 a year, I'm comfortable. I do 30 years, get my 401k, get my TSP, and I'm out of here. How did you even get started with real estate?
Well, I guess it goes back before real estate. So I was a teenage dad, right? So I had my kid when I was 16.
Okay.
Right? And then I went to Southern on full academic scholarship, and I had a guaranteed job when I graduated.
Come on, academics.
And so,
Smart young man, huh?
Yeah. So I got out, and then they put me on this big project in Memphis, Tennessee. And so I was, 22, making like $65,000 a year. They helped me gave me a down payment to buy a house on a moving package. And I'm like, man, so I got this money. I got this dream. And my son is back in Port Arthur, Texas, and my mom is in Port Arthur, Texas, and I have no control over that. And if I want to take off in the middle of the week to go see them, I can't. Right? And then my boss, who was 33 and black and was running this entire project, was like a $100 million project, and they had her over all the diversity magazines and all the diversity brochures for the company. And
it was a she?
It was a she.
Come on.
Yeah,
One person?
Martita Mullen.
Okay.
Yeah.
Okay.
But she was making like $120,000 a year. She was 33. And she was miserable.
Yeah.
Right.
And so I'm like,
balance.
No
balance.
Exactly.
No
so
balance.
for me, it's like, okay, this money I can see right now. This money ain't gonna hold me.
Ain't gonna be enough.
Say that again.
sanity.
A lot of people need to hear that. Say that again.
The money will not hold you,
Regardless of the amount.
Regardless of the amount. Regardless of the amount. And so at that point, that's when I started thinking about, well, okay, so this is how I really got into real estate.
Okay.
The house I just told you about that I bought, it was in 2008 when I decided I didn't want to do that job anymore, and I quit and I moved back to Texas. And 2008 was the housing recession.
Right.
So
it sure was.
So I couldn't sell the house.
Right.
So I got another railroad job in Texas, and I was basically still paying the mortgage on the house in Memphis. And out of frustration, I was like, man, I'm just going to have to hire somebody to get a tenant in it for me. And so I did that, and the property manager rented the house out for $1,500. My mortgage is only $1,100.
Okay.
So like after a month or two, I was like, wait a minute. So somebody else is managing this tenant. I'm not touching this property at all. And I'm making what somebody makes in a week and a half working a minimum wage job, and I'm not doing anything at all.
At all, right, correct.
At all.
Now, we're going to put a pin in there to remember that, because we had a conversation. This man feels it's hard to do what you just said do.
What's that?
He thinks that's impossible, to rent out houses to people, that it's just hard work. It's impossible.
it's not impossible. It's not easy either.
We'll go back to it. Just keep
It's-
going.
yeah,
Give me your story.
Yeah.
He needs to learn this.
Yeah.
I'll learn you something today, Nelson.
Go ahead, Chris.
Yeah. So, so
Brush that out.
so from there when I was back, so now I moved to Houston, and my line brother, Vondra Christmas, worked for We Buy Ugly Houses, the home investors people.
Mm-hmm. Yeah.
And so he plugged me with one of their contractors that they used to rehab a lot of their houses in 2008, and he actually helped me negotiate the first deal that I got. So I bought a house from them and used the contractor that they use, and that's how I got into flipping houses in 2008.
Okay.
There you go.
Mm-hmm.
So
Destined, man. That's what I heard from it.
It chose you.
Yeah.
It chose you.
Yeah.
So the process of buying a property. So say if I'm coming out of my first job, I never had a property. I have apartment, and I'm looking to buy a property, right? Not just a property, but I want a cash flow rental property also. How do a person do that?
So, okay, number one is going to be based off of a few basic factors, just like buying a house to live in, right? Okay. The bank is going to look at your credit, of course, to see if you have decent enough credit to be able to, people think credit is real complicated. Credit really isn't complicated. All it is a way for people to check to see how well you paid other people back for money you borrowed from them.
Basically, how responsible you are.
Exactly.
Yeah.
And that's all credit is. Credit is somebody giving you money for something that you don't want to pay cash for.
Right.
And then the credit report just shows how well you've been paying people back. Right.
Track record. Yeah,
your track record. So, they'll look at your credit report, and they'll look at, what your income is, and then they're going to look at what your expenses are, and they look at these ratios to see, well, he makes this much, but does he have enough extra money every month to make sure he can pay us back?
And what is that called? That's called debt to income, correct?
Right. Yeah. The DTI. Yeah. Debt to income.
That boy been reading, studying.
Yeah.
Okay.
Yeah. So long as you have a good ratio, as long as if you can show that you're only spending 40% or less of what you make, usually you're okay.
Okay.
Right.
And then if you're trying to get a rental property, they're gonna look at, where's the rental property. They're gonna look at the condition of the property, and then they're gonna look at what the potential rents are in that area. And what they usually do is they'll give you credit. So they'll say, if the house will rent for $1,000 a month, they give you credit and say, we're gonna say $750. We're gonna say you're gonna be able to pull in $750 off of it consistently.
Okay.
And if that rent number plus your income number makes sense, then they'll give you the loan to buy the house.
Okay.
Mm-hmm.
Now, when you was talking about you was working, making good money, couldn't see your kid, you felt like you wasn't being the best father you could be, right? What was inside of you that, were you already reading books that you could identify an opportunity? Like, hey, this may be something I could be beneficial for my future. I just want to know what was inside of you to be like, man, this is it. I need to put all my focus into this.
Yeah. So, man, honestly, even going through college, I didn't know nothing about business. I didn't know nothing about real estate. We were taught, like, be a doctor, lawyer, engineer.
Right.
I was like, engineer 4 years, I'm going that route,
Yeah, right. And everybody's saying it's a high-paying job.
Right, it's a high-paying job. And then everybody,
check.
Exactly. And, we from Louisiana, Texas. Everybody loved the railroad, too. So I'm like, railroad job, cool. All these boxes checked.
30 years.
Yeah.
Let me go check this money.
Right, yeah. But man, like I said, once I got into it, I just felt like I was sold a dream. I was like, nah, this cannot be it. Did I know? I had no idea.
Yeah.
But it was just like, started reading books and my girlfriend at the time, she got mad at me. She was like, you got this good job, like you money hungry now. And I'm like, no, I'm not money hungry. I just want to get money out the way. Like, I don't want money to control every decision.
For peace.
Exactly. Peace of mind.
She
Yeah.
didn't have vision. She didn't have the vision.
Yeah.
You were hungry for peace.
Right. Yeah, I was. Yeah.
Right.
Peace of mind to know that I'm not depending on someone else that's cutting my check, and that's also going to dictate my entire life. They literally tell you how many days a year you can be sick.
Right.
Yeah.
Come on.
A boss.
Vacation. Right.
At vacation, yeah.
Right. My
yeah.
brother works for the railroad.
Yeah,
so I know.
yeah,
Right.
yeah. It's highly demanding.
As a black man, do you, and this is, I know we're going to get to the ins and outs of real estate, but just character-wise, do you think that's something we struggle with black people, that our family haven't done it before? They secure in that mindset of chase that 9 to 5, make your money, get your house, get your little savings. But as a black man, do you think we need to do more of that, stepping out on faith and just going for it, opposed to being boxed in that, standing in that box?
We definitely do. And something that I as I started studying like where we are and how we really got to where we are, and I started looking deeper, I realized we were there already.
Correct.
Right.
Because if you think about it, anytime you go to the hood and you see all these abandoned businesses and old stores, those used to be all businesses.
Right.
And I mean,
Black businesses,
yeah. Right?
But that dollar goes around once.
Yeah.
In our community.
Yeah. But this is what happened. So think about this. So from the time of emancipation, when we couldn't patronize anything,
correct,
we had to build up our own little towns.
Absolutely.
Right.
So the doctors, the lawyers, everybody, the insurance company, the cleaners, the shoe shine man, we all same street, lived in the same neighborhoods, and we got so caught up in the civil rights movement of. It started off as treat us equal.
Let's go there. Let's go there, Chris. Let's go there.
But that's where we are now. So you're preaching. Come on.
Then it got to accept us.
Come on.
Okay.
And let us in everything.
Okay. So
let me ask you this: if you went to an all black town in 1940 where all the businesses was owned by black people, did we need affirmative action to get a job?
No, we didn't.
We did not.
We didn't.
You did not.
We did not. Did we have business owners in our community?
Yes.
So we had a whole group of people.
We had everything we needed.
And the mindset that you're talking about, the people that started those businesses, some of them was actually slaves. Or their parents was actually slaves.
Right.
And we use that as an excuse today. A slave mentality is why we can't get ahead.
Right.
Right.
So we spoke about that, but we spoke about that before on a previous podcast. We talked about integration versus segregation. And I was saying
the disadvantages and the benefits.
We was just talking about the reference we used was the Negro Leagues. I was like, what's the guy name? Jackie Robinson.
Jackie Robinson, yeah.
They integrated him into baseball just to sacrifice 9 Negro leagues.
Yeah.
Right.
You know what I'm saying? 9 different Negro teams just for one person.
Right.
And that's the same thing you're talking about.
Yeah, you know that ice cold over there.
Yeah.
That's what they want us to believe.
Right. But and the crazier part is if you really look at it, even when we was fighting for civil rights and to be accepted, they were still segregated. There was a model there. You go to a big city, there was Little Italy, there was Greek town.
Yes, Chinese town, Chinatown, Asia town.
Right. And what we do, we want to move in everybody's stuff.
Right.
We're like, nope, all y'all letting
it look good over there.
And they looking at us like, what are y'all doing? Y'all have your own communities.
Correct.
Right.
You know what I mean?
That's how you get a green book.
Yep.
Yeah, that's true.
How you got the green book.
Right. That's true.
Yep.
But you know what? That same mentality though, what you're saying, you said you educate yourself first, right? And I'm talking about schooling. I'm talking about education for self, knowledge of self. A lot of us, I think, we don't have knowledge of self. We don't know who we are because, you know, we're listening to a story from a broken, oppressed people. And you know you can't blame them for that, but they had to do what they had to do to go along, whatever.
Yeah.
But anyway.
Let me say something on that.
Go ahead.
And I want you to piggyback. Guys, you know how I feel about this shit.
Because I have a question.
So when you're talking about self-education and kind of stepping out on faith,
yes,
I think most of our people struggle with, for one, fear, because you don't know what's on the other side.
Everybody does that.
Yeah. If I go to this job and I'm gonna get that check every 2 weeks, I can go buy certain things. I can be happy. I can think I'm happy. Now, when we think about examples of success and shit like that, a lot of us in our families don't have that example. Is it possible? So, I want your point of view on it. What will it take? Or is it something you just got to dig deep as an individual? Like, I'm going to be the one to break these cycles.
You definitely have to dig deep as an individual. I think we spent too much.
That was part of your motivation?
Yeah, you have to, because I just realized nobody's gonna do it for me.
Correct.
And it's hard to find a lot of people that think like that.
My point that I bring up a lot, well, I've brought up several times, that us as a people, we don't realize when you talk about property, and we say fifth ward, places like that, and if you've come across trying to buy property and things, how often have you come across air property that proper paperwork, proper lineage is not there? Mama left me this house, but there's no paperwork in place. And I learned that after Katrina, working on the grounds as a crisis counselor, trying to help people understand what they can get, what they can do, going into your rural areas of like Folsom, Covington, places like that. People sitting in houses with mold and needing repairs, but they can't do anything because there was not proper paperwork.
Yeah.
How do you fix that? I know you can open up succession, but what
Good
needs
teach.
to be done?
Yeah. Well, I mean, legally, I mean, you have to go through the proper legal channels at that point.
Right.
Like
And
the
everybody
succession.
can't afford that, though.
Right. Yeah.
Succession is not free.
Yeah, it's not. So it's a very unfortunate situation where that's where you see a lot of people losing their real estate. And so, in my position, I try to help as many of them as I can, but you really can't save everybody, unfortunately.
Right.
But so there's two stories in that. There's a really sad one, and then there's one that we missed. Like we think that for some reason a lot of us didn't own a lot of property. You know what I mean? But what you just said was all over.
We did.
With
the mineral rights.
Exactly.
And that's something to say.
With
Because
everything.
mineral rights they don't give you now. But there's a lot of land that our family members have without proper documentation that have the mineral rights.
Right.
And when I say mineral rights, if you ever in oil and gas and understand when they come fracking on your land, there are people in Shreveport right now who can't say 2 + 2 is 4, but they living off of the interest, off of the millions they're making off of the oil and gas that's found on their land just because they own the mineral rights. But when you buy land now, they don't give you the mineral rights because they know that.
So, Chris, let me ask you this. So, is real estate
Amen.
having real estate is that considered as having generational wealth? Because some people have the misconception of they think because you have houses that's generational wealth, and I disagree.
No, well, but you just gave the example of why it's not generational wealth. If you don't have your things in order,
Proper housing.
Exactly.
But see, wait.
Correct.
What you said is two different things. So people we're talking about is one house they living in. When you talk about people with houses, like my family, that's generational wealth.
But all right, so the reason why I say that,
Okay.
when you have
Those
now,
are
correct me if I'm wrong. Correct me if
Those
I'm
are
wrong,
separate.
Chris. The reason why I say that because majority of us, we have property that's handed down to us, but we don't live in that state. What happens to it?
yeah, it gets neglected. Yeah,
Or somebody-
Sometimes.
or it sells.
sometimes. So if you have the proper systems and the proper documentation, and you've trained the next generation on what to do,
Can it be generational wealth?
of course it can.
Amen.
Anything can be a business can
Okay.
be generational wealth.
There you go.
Giving somebody $1 million can turn to generational wealth if they know how to invest it. Like you said earlier before we got on the air, your dad
It's
said
knowledge.
No, your dad said something about if I win the lottery, I'm gonna make sure that I have the same amount of money every year.
The next year. Right.
The next year.
Right.
And so that's how you build generational wealth. So the true definition of wealth is when your passive income exceeds your lifestyle.
Right.
Right. So, but somebody having 20 houses, and if they raise their kids with a silver spoon and don't teach them the responsibility to go check on those houses, go inspect those houses,
Correct.
make sure those tenants are taking care of those houses, and then that parent between the age of 65 and 85 just goes downhill, and that all those 20 houses go downhill. By the time that parent passes away, those houses aren't worth anything to the next generation.
Correct.
Right.
Correct.
So you have to educate them on what to do and have the systems in place to be able to make sure it does continue to generate money.
If they
and
can
wealth
build
for them.
houses, they won't build more land.
Exactly. Yeah,
That's true.
Yep.
So let me ask you this: we were talking about black, and TB was talking about black, just black people and black things in general. So the concept, I've seen that you have a concept that a lot of people in different states have been brought into called buying the block back, but making it black. So could you speak on that a little bit?
Yeah. So it's basically talking about these same neighborhoods that we've been talking about this whole time. And as a fix and flipper, as a rental property investor, that's a very singular focus. Like you focus on yourself and just trying to make money. But what I realized is nobody's really talking about gentrification or like what's really going on in our communities and all these properties like you're talking about, and the generational wealth things that you asked about. So this project that I have now specifically. So when Barack Obama he implemented something called the Jobs Act, and what it does, it part of it was allowing people to crowdfund. So basically, like what you could do for like a GoFundMe to raise for charity.
Right.
Technically, before 2012, it was illegal for us to go around and say, "Hey, let's all pool our money together and buy something."
Was it? I didn't know that. Okay.
Yeah. So like for real estate, like $1 million deals and anything like that, you had to be you had to be able to do a syndication.
Right.
A syndication is a big word for collectively pooling money, but you had to be a millionaire.
You have to have
Right.
that
Accredited
resources.
Yeah, you had to be accredited investor, so you had to be worth over $1 million, not including your personal residence, and or you had to have made $200,000 a year for the past 2 years.
I got you.
Outside of that, it was literally illegal for us to pool our money together to buy.
That's the way to keep you out.
Exactly. Exactly.
Systematic.
Exactly. So they changed that in 2012. Barack changed that in 2012. And so what I was able to do.
That's something he did for the black people.
There you go.
Since they feel he did nothing. Amen.
I'm one of those people.
But that's a whole other story.
Now you know.
We don't want to get him lit up on that.
I'm them.
Now you know.
I got my brother over here. He'll do the same.
Now you know. He opened that up for you to be able to do that.
Shout out to Barack Obama.
There we go. Yeah. So what I was able to do was like, one of my students that I want to teach wholesaling is like going out and find distressed sellers and landlords that want to get rid of portfolios. That he called me and he's like, man, I got this Fifth Ward property. It's like a whole block. He's like, it's 18 houses and 2 commercial buildings, and this old couple, they just ready to retire. And he's like, can you help me sell it? And so I was like, tell me more about it. He's like, man, it's an older black couple. I was like, do they have tenants? He's like, yeah, it's full. He's like, some of the tenants been there 19, 20 years.
Straight cash flow, all cash flow.
All cash flow.
Reliable.
Yeah, exactly. Stable, reliable. You wake up on the first, it's there.
Ding, light been off your hair. What?
Right.
He said, tell me more.
Right, exactly. So I'm like, don't tell anybody else about this.
Matter of fact, where you at?
Right, exactly.
I'm going to come to you.
Right.
Say less.
So I went and met with him, and he told me, they had it listed a little bit too high.
Okay.
But they had owned it for like 25 years and they were retired, and the kids didn't want to take it over.
Of course not.
The kids didn't want to take it over. So I knew what was going to happen if I didn't put something in place. Eventually,
somebody's going to get it.
The white person was going to buy
it. It was going to be
the colonizer. Just said the colonizer.
We just had that conversation. We can't gentrify. So it would have been re-gentrification when you come in, but it would have been gentrified.
Yeah, I call it revitalization.
When we come back in and do
that's the word. That's the word.
Right, revitalization.
Yeah, and we do it our way. So that was my goal. So I was like, well, look, like since it's got so much good, stable cash flow, I just need to get them to come down to a price that makes sense for me to buy it as is, and I can still be profitable with it without having to raise the rents on anybody.
Help me help you.
I got you.
Exactly. And they cared about the tenants too. They were concerned about the tenants getting displaced.
Oh, that was good.
Yeah. So that helped. And so what I was able to do with that is like, I was like, look, I'm still not gonna go to a bank because it was like over $1 million. They wanted $1.5 million.
Okay. That was gonna get ugly.
Yeah. So I talked them down to $1.2 million, but I was like, but look, I need you to finance it to me. Like I don't want to go to a bank. Like I want to negotiate a deal with you to seller finance it to me. And so they agreed to that. And so they agreed. They say, okay, well, look, if you come up with half of it, because we got some things we want to do for our kids, we got some things we want to do. If you come up with half of it, then we'll sell it to you like that, and we'll give you a couple of years to pay off the rest.
Oh, that was generous.
Yeah, that was very generous.
Because in business and capitalistic society, they were like, hell no, I want the money.
And also, I told them two things. It's like, number one, look, y'all don't really have accounting records, so even if somebody that was buttoned up and had all their stuff together, wanted to buy it, you don't have anything for them to take to a bank to prove to the bank.
The people need to hear that.
They didn't have the paperwork. They didn't have they had the accounting together. They didn't have.
There's no documentation.
No documentation.
It did not happen.
Exactly.
Mm-hmm.
That's true. Exactly. And all they had was like Xerox copies of the money orders every month from when they.
That's it.
Right. That's it.
That could be a dope deal.
You can't take that nowhere.
Get a cartel.
Right. Get you some QuickBooks or something.
So I said, number one, I couldn't get it financed with a bank if I wanted to that way. Number two, if I did give you all the money you want, you would pay so much in taxes on that you'd only walk away with like $800,000.
Right. Look at you.
Right.
Yeah.
Educate the people.
So you was basically using. So all right. So look what you doing? By me listening to you, really know the order. But you had. So the thing is, you were savvy with not having sales experience. But you knew how to negotiate.
He understands negotiation.
Exactly. You see what I'm saying? It wasn't just knowledge about real estate, but you had that information about how to negotiate.
Yeah,
I call it street smarts.
It is.
Right.
It's
hustle.
Yeah, it's hustle. And what I tell people is,
he turned you into a 2-bit hustler.
But that's what I do. I tell people, I was like, everything you do is sales, whether you realize it or not.
Right.
You're either selling a product, you're selling a service, you're selling an idea, you're selling a concept, or you're selling yourself.
Right.
You're selling yourself. Absolutely.
Period.
Yes.
Amen.
And so, once you understand that, you understand everything is a negotiation. Everything is understanding what the person on the other side of the table wants out of something, how they feel like they're going to benefit, and then you just approach it from that angle. So my approach to them was, I'm going to help you get more money over the long term. I'm going to help make sure your tenants are stable. I'm going to take good care of them. And you get to pass it down to somebody that looks like you.
Right.
So
this is beautiful. That's a beautiful thing.
Right. So from there, I was like, okay, so what I'm going to do now is I'm going to raise the money to buy it.
Okay.
And instead of going to one rich person to try to get it or wait for LeBron or, Uncle, or Oprah to come, drop some money off of me. I was like, let me try to do this crowdfunding thing that Barack Obama implemented. So that's what I did. So I decided to break it up in a little bitty increments, $250 a piece.
Okay.
So, to raise a full $1 million. And I was like, $250. You come in, you're gonna own a small percentage of this. You're not loaning me money. It's not a gift. It's actually an investment. So
before you get there, I want to ask you this question because I know the story already, but I want the people to hear. We as black people, we don't trust each other.
Right.
So if a young black man, articulate, successful, good-looking brother come in and say, just give me some of this money, you're gonna have a small investment in this property and see what we could do. So how did you get them? How did you get the people to invest in your idea?
So it's a total of about 1,500 people.
You talking to the people. You talking to the people.
Come on,
okay.
people.
Talk about a little piece of
that.
So what was your pitch? Come on.
So, I mean, he can tell you, it wasn't really a pitch. It was me just explaining the storyline, explaining what I want to do. My social media following is probably 70,000, 80,000 people. So I wasn't in the convincing business. Like, I wasn't trying to convince anybody. Right. I was like, I just told the story. I was like, this is what happened. I put together a little video that explained, what usually happens in our communities. And I talked about the property, and I showed everybody a tour of the property, and I showed them how close it was to the real gentrification. Because like 3/4 of a mile from where this project is downtown, and the same developers that built City Center are about to build a big development right there on Buffalo Bayou.
Oh wow! So that's gonna be crazy.
Exactly.
Yeah.
Right. Yeah, right on Buffalo Bayou, right by the water. Okay. But they put in a whole lot of drainage though. They're gonna be all right.
The city
but it's gonna flow to the house.
But you know what? But Fifth Ward never floods. So
really,
it hadn't flooded since I've owned property since 2013.
Come on, God.
Yeah.
So how does a person? All right. So I see that you're ahead of the curve. All right, for as buying property and seeking out property. How do you? What's the process of doing that? Because I know they have certain areas that they develop, but they use a 10-year system that a lot of people don't know about, and they only get if you have $10-20 million worth of real estate, they let you in on it first. But how did you get in on that first?
Man, okay, so that's a good question because I used to randomly just pick houses to flip and rehab and stuff. And then, man, it's a crazy story. When I was 26, I got a DUI, and I did a community service instead of going through the trial, like the pretrial diversion program. Okay. I was working in George Bush Park, and the manager that managed the park was actually a real estate investor on the side. And man, he's an older white guy. I just started telling him I invested in real estate, and I told him, he was like, man, so how do you pick your houses? And I told him I just randomly pick who I get people to send me leads, or I look on the har.com and find. He's like, no, you got to look at the city plans. He's like, the city, it's the city council, the planning and urban development department, all those departments, they pick where the next hot spot is for the city.
Yep.
And then what they do is they go in first, and they'll fix the streets. They'll do the sidewalks.
Yes. Yep.
They'll redo the street lights. He's like, and when you see that, that's a sign.
It starts developing.
Happening.
Exactly. Because that's all the stuff that the public, the government side can do to entice the private investments from the developers.
Correct.
And then he said, watch the city council minutes, watch all the announcements about where developers are buying land at. And then, wherever they're going, that's where you want to go. Because the entire area around there is going to change after that happens. And so I started looking at the city, and I was like, dang, it started in the Heights, and it went counterclockwise around Houston.
45.
Yep. Started at 45 and
Woodlands, Conroe, and all that stuff.
And at that point in time, it was like 2010, 2012. So the Third Ward was just starting. So I was like, well, dang, let me just get ahead of this curve. So
you went a little further up.
I was like, Fifth Ward it's the last quadrant. It's the last quadrant. So eventually it's gonna happen there. And so since 2013, man, I've been focused on Fifth Ward.
Wow.
Man, would you say? Because we talk about real estate, we talk about opportunities to make money, extra income, streams of income. Would you say real estate is for everybody? Because there's a lot of things to get money, but I think, if you ask someone randomly speaking, I do real estate. No, you really don't do real estate. So do you think real estate is for everyone to get into, or do you need to have knowledge in case an opportunity comes in?
Yeah, I think it's more of the latter. Real estate is like any other business, right? There's people that's millionaires from doing all kind of businesses, not that don't touch real estate at all,
Right.
and rather just rent their primary residence because they like the peace of mind of knowing if something goes wrong, somebody else can fix it, right?
Correct.
So I don't think everybody should be in real estate because it is stressful. You do have issues, like especially being a landlord with tenants and stuff like that. You can't pick a bad flip deal and lose money. You can't have real estate in a recession and then the property value goes down and you lose money.
Correct.
Right. I tell people all the time, if real estate was really this foolproof system that some people try to make you seem like,
everybody would do it,
and there would be no such word as foreclosure.
Right.
That word wouldn't exist.
And people don't recognize when they say it's a buyer's market and it's a seller's market. There's a difference in the two.
It is. Yeah. Right.
There's
So
a difference in the
sometimes there's too many houses for sale, and the buyers have to. Buyers have the advantage because sellers are desperate to sell their house, and so the sellers end up losing out. And other times, there's not a lot of stuff to buy, and then the buyers end up overpaying for stuff just to get a deal. So that's when it's a seller's market.
We learned haphazardly a telltale sign of real estate. Not really, but schooling. So they put a private school in my neighborhood, international school. It's been there about 3 years. Right before the school was completed, we started getting cold calls on our landline from realtors. People are offering cash money to buy our house because they want their kids to go to this private school. And they were like, we're not selling our house. They understand, but they're offering you this much money for your house. So school, you have to look at what's around the area.
The drivers,
like
the economic drivers.
City center being put there, them rehabbing roads and things like that, but definitely schools. When you start thinking about where kids are gonna be, that's a big telltale sign for real
schools
estate as well.
And like you even think about that dead area of Spring before Exxon got there, it was dead.
They paid to finish 99.
Yeah, exactly. Right. They
paid
Exxon
to
for a
finish
whole freeway.
99 for them to finish a major freeway just so that people can get to work.
Right, and all them new subdivisions came about because so anybody was paying attention. They own that land out there. That's the ones that really make
Cypress
it big.
went from 6 schools to like 15 overnight.
Cypress? I don't know nothing about Cypress.
99 opened up and Cypress got 25 schools now.
So when they say buyer's market, so a lot of people say, what is a buyer's market? Because that's the language that a lot of people don't know. People that's in real estate, they understand that. So for instance, like the market now, the average house you get at 2%, 3% interest rate when you buy a home. To what you just said, do you think it's a good idea if you have cash? It's a good idea to start investing in these properties? Because I was looking at that. I was speaking to my wife. I was like, well, I don't think it's a good idea to just start buying stuff up because who's to say, like you said earlier about the city plan, who's to say this is going to go up in value? Yeah.
So that there's always a bit of speculation in that, right?
Right.
Because when it's a buyer's market, like I said, that means there's a whole lot of houses for sale and there's not a whole lot of people buying them.
Correct.
So when a seller gets somebody that comes to give them an offer, even if it's low offer, they take it sometimes. So that makes the market is in favor of the buyers. So sometimes you don't know how long that's gonna last though. So when you buy property, it's just like buying stocks too. Like when there's a dip in the stock market,
take it out.
Yeah.
I'm taking mine out.
Yeah. Or some people go in and buy a whole bunch of stocks. But you don't really know when the market's going to go back up.
Correct.
Right. So
like now.
Right now. Yeah. So but
what's up now?
The thing about stocks,
it's starting to go up.
The thing about stocks that's better though is because you can sell them quick. Like you can
correct. You get out of there fast. Yeah.
With a house, you can't do that all the time. You can buy the house and be stuck with it.
Sitting there.
Yeah. So you definitely need a team of experts to understand that market, understand what's going on, to help you make those decisions.
So when is the best time to buy, for as equity in your home? I said 100,000. If you got 100,000 equity, get it out of it quick.
If you trade up, yeah. Well, no.
Where you going, Nelson?
But you know what? Yeah, that's true. So that's something that we don't do a lot in our community, but a lot of other communities do. They trade up.
Yes,
they trade up. So you start off in a market that's like decent, and then as that equity builds in that house at $100,000, you sell it and you go buy another house.
That's right.
And by the time so if you got $100,000 equity in the first house, right, and you go do that again the second time when you sell that second house, now you got $200,000.
That's right.
So by the time you've done that 4 or 5 times, you can go buy a $500,000 house cash and not have a mortgage at all.
Right. That's what I. That's so when I say that, the reason why I say
I'm
that,
trying to get my mama to sell her house. I'm gonna talk to you. I need
Mississippi.
I'm gonna call her in a minute.
Right, you can buy 1,000 niggas in Mississippi for $500. Right,
I'm gonna get her house. No, it's gonna be gone too. I'm telling that.
So Chris, let's talk about the mod, the project that you got going on right now.
Yeah.
Speak on that. What you got going on with that?
Yeah, so the mod is my graduation up to the next level of trying to do even bigger things.
Okay.
So I got a new townhouse construction project in the Fifth Ward, building 14 houses, and I got the By the Block project. Where we raised $1 million and did the portfolio, and just amongst all of that stuff, I was able to be kind of first in line for a site that's a historic church in Fifth Ward. And the church has decided they're gonna sell and move to a new campus. It's like 5 acres, and they're gonna they want to sell, but they want to kind of keep some of the culture of the church and something in the community. So they gave me an opportunity to kind of take the first stab at trying to put a project together. So what I did was I put together a team that's done these types of development projects before and kind of sees the vision, and so it's what we're projecting to do is gonna be like a 226 unit apartment complex, and it's gonna have we're gonna take the old sanctuary from the original church and convert it over to like lofts.
Okay.
Yeah.
All right.
So it's a huge project, and it takes a lot of capital to raise for a deal like this. So it's completely different from doing like a crowdfund.
Okay.
So you have to go to I'm using opportunity zone investors. So those are the people that have all these capital gains from selling companies or selling businesses or selling stock, and they want to kind of prevent from paying taxes on it.
That's their write-off, right?
Yes, that's their write-off. So they can you can invest in projects in these neighborhoods and not have to pay taxes on your money, basically.
So what's the not the logistics, but what if I wanted to invest in that property and I have cash, right? Hard cash. So I have assets that I could I could put on and invest into that. How do I get into that?
So there's a whole bunch of documentation, a bunch of legal contracts,
like a mortgage.
Yeah.
Right.
Yeah, and the most important one is called a private placement memorandum, which is basically a SEC, Securities and Exchange Commission document that says you're investing in something that's not listed on the stock market, right?
Okay.
So you're privately placing your money in an investment that's not listed on Dow Jones or NASDAQ or something like that. And so so you fill out this document, and then you also have to certify that you understand this is an investment. You understand every penny's at risk.
Absolutely.
And you can't get it back. And then so that then you can invest. And so the minimum investment for this project is like $50,000 because it's a huge project. And the way it works is like, so you have a few investors that put up $50,000, $100,000, and you try to raise a couple million like that. And then the rest of it, you go to the big banks or whoever else, or these big like investment banks that have all this capital from all these investors, and they put in too. And that's how you structure the funding for the entire project.
Okay.
Yeah.
So, and this is another question I want the viewers to listen to.
This for the viewers or this for you?
Me also. I'm an educated too.
Me too.
Because I have a different when it comes to money. I have a different understanding. Investing with just us. So I know in order to get rich, you got to take a risk.
Right.
So now, do you only accept investments from black people?
No.
I'm glad you said that.
He can't.
I'm glad you said that because you know
possible.
why? No, you know why? Because a lot of people are pro-black, and I love my people, but they don't understand the nature of business.
You have to have allies too.
Yeah.
You have to have some allies.
You know what I'm saying?
Right. Well, yeah. So the best example of that is when we talk about like the richest people ever. We talk about one of them always comes up is the King of Mali, Mansa Musa.
Yes.
$200
trillion.
Yeah. Today's money.
Crazy.
Yeah, exactly.
Yeah.
But if you notice, the reason why he got that wealth, it wasn't because it was all African everything.
Yes.
It's because he did business with every other continent, and everybody wanted to come to Africa to do business with him. And so right now, the dollar leaves our community, every hour? Every
30 seconds, 30 minutes.
Right, every 30 minutes. So number one, so if you want to reverse that trend, number one, you want to start creating your own dollars. Number one, you want to take your money that you earn and spend it in our community. Then you want to start generating money in the community. And the ultimate reversal is to have a dollar coming into our community every 30 minutes from outside the community.
Okay.
Right.
So now you need it, but you need some type of
something. You gotta have something to offer.
You gotta have something to offer.
Whatever it is. Whatever.
Right.
So where is the project now? The initial project that TB invested. What's the name of
that's
it?
the Fifth Ward.
So the By the Block project. Yeah. So we went in and we did. I did a lot of just upgrades to the residential houses. Nothing fancy. Like I didn't go in and flip the houses.
So you met your goal though.
Yeah.
You got your money.
Oh yeah. I'm sorry.
Okay.
So we talked about it. Yeah. So the maximum you could raise is like $1,070,000, and we hit that in like 7 months.
Okay.
So we raised the whole $1 million, and then the first thing I did first was I went in and made sure the residents knew that we were looking out for them. So I went and did deferred maintenance, like cleaned up floors and like replaced cabinets and fixed roofs and put screens on everybody's windows so the electricity bills go
deferred maintenance.
down.
Use that word.
Deferred maintenance.
You use that word. I said a lot of people don't know what that is.
Yeah.
Right.
Deferred maintenance.
So when you defer something, that's something that you don't want to deal with for a while.
Correct.
Right.
And when you buy investment property, the previous owner has a lot of things that they deferred.
Amen.
Yeah, right. And so when you take it over,
doing that.
Right.
I ain't doing that right.
We're gonna let him deal with that.
Exactly.
We're gonna let the little young boy deal with it.
Yeah, that
He
becomes
young.
right, and that becomes your baby. So
Right.
if you don't fix it before it breaks, it's definitely gonna break.
Absolutely.
And it was a lot of things that like the flooring, the decking around the toilets and stuff. If a toilet falls and you got a 65, 70-year-old tenant, that's a lot of liability.
And that's the thing.
Yeah.
See, there you go. Because a lot of those places like that, it's in 15 years, you have elderly tenants. A lot of people don't realize that. You have a fixed income, and you have elderly tenants. So did you do a walkthrough? And
Yes.
did you do the walkthrough, or you allowed them to tell you what needed to be done?
No, both, definitely
Okay.
both. Because some things they don't even know. Like they don't, and they've a lot of them have been living in that standard so long that they don't even realize
It's
normal.
Right.
Yeah.
Right.
They're immune to it.
Right. Yeah. So anything that looked like it was a leak that could be mold or anything like that, like we got rid of all that stuff first.
And so, like Adam said, our people, they need to see. They need actual factual. So of the people who came in and invested, what did you provide for them as their return or as their guarantee? Your money went somewhere, it matters. What was their get back?
Okay, great question. So number one, I explained to everybody that we are in a market and a part of the neighborhood that's gentrifying. So number one, just by us owning this, the land value, the property value in itself is gonna go up.
Absolutely.
It don't happen overnight, but it does happen. So that was number one. Number two was I was like, we got all this stable rent, right? We got this rent from these tenants that have, some of them been here like 20 years literally. It's literally two sisters that have been living next door to each other for 19 years. Yeah. So I said, so after all the bills are paid, I'm going to take 40% of the rent for the whole year, and I'm going to divide that up and send it out to everybody.
Okay.
As a check. So it's like dividends, like a stock.
Right.
Right. So those two things. And then once a year, I'm going to get the property appraised and let everybody know how much the value went up.
Right.
And at that point in time, if you want to
pull out.
Yeah, if you want to pull out.
Yeah, you could.
Yeah.
If you want to keep it, yeah.
Exactly. So I'll divide up the new value. That's what your shares are worth. You can sell them.
So the pullout could be more than the $250 they put in.
Oh, definitely.
Come on.
And that's the goal. Yeah.
Let me hold something,
Yeah.
TB.
What a goal. The goal is this. If I was the owner, the goal is to buy everybody's dividends so I can own property. But that's another story.
But you want to keep them involved. You want to take them to the next project, to the next project.
Yeah.
Okay.
Say, important question. Important question. So when we think about, I'm alluding to what I asked you last time. So when I can go Google real estate and people can come up with seminars and you pay me $500 and I can teach you how to do this and do that. If a person is interested in getting into real estate, first question, what's the, I won't say easiest, but what's the basic form of real estate, if that's a question? And then secondly, what's the first steps to taking real estate serious? That's reading books, that's getting a mentor like yourself, or how would you do that?
Yeah.
Starting from ground zero.
So start from ground zero. Okay, yeah. So I think the two easiest ways to get into real estate are number one.
Listen up, listeners.
Yeah, number one is just having rental property, right? I tell people this too. If you like where you're renting at your primary residence, like if you like your apartment and the rent's something affordable and that they take good care, don't go out and rush to buy a house to live in. Because the house that you buy to live in, you become responsible for everything.
Yes, Lord.
Right.
Everything. And, it's not, people think it's an investment. The only way the house that you live in can really be an investment is if you add up the mortgage, the insurance, the taxes, the lawn care, the repairs, the maintenance, the HOA fee.
Everything.
If you add all that up, and the property value of your house has gone up more than that every single year, then yeah, it's positive. So that's an investment. Otherwise, it's just your decision to live in a house. Right. Exactly. And so I always suggest, like, if you do want to get in real estate, buy a rental property first, because then you can use all those benefits of having your first mortgage, something that's generating money for you every month.
Right.
And so it kind of reverses that trend of you going into more debt for something that's not giving you anything back. Right.
So would you get a cash flow? Would you? I know we're getting free information from you, but would you prefer? Would you prefer to get a property that's cash flow, or it's going to be something big in the next 5 years? What you going to sell?
It depends on your personal financial situation.
Okay.
Right. Because if you can park your money into something without getting a return or even having to
breaking even or
whatever. And what you're referring to a lot of times is people say, I want to go buy land. That's what you do when you buy land, because land doesn't generate anything for you unless you lease the land out.
Right.
But if you just own land, yeah, you have expenses every year. But now 5 years from now, that land could triple and be quadruple what it was worth.
They're not making any more.
Exactly, they're not making any more. So if you have the monetary capability to buy something like that and just still carry the cost of it until you sell, then that can be good. But I do recommend things that have cash flow, because it pays for itself and it generates money for you.
Is it a certain such thing as no cash money down? You can get in real estate with no bread.
So yeah. So there's another side of real estate where you're more of a transaction person, where you're finding properties that are distressed, and then you're just selling them to another
wholesale.
Wholesaler.
Wholesaling,
right.
yeah.
You're selling to another investor for more than what you got it under contract for. Mm-hmm. So yeah, you can do that, and some of that can literally be free if you're in the right market, where like you're literally riding around knocking on doors, asking people for contact information for the sellers, find the seller, get the seller to agree to a price, get the seller to sign a contract.
Like Detroit.
Yeah.
Got your little bandit signs out there.
Yeah. Oh yeah, like bandit signs and stuff too. That that costs a little bit of money. You got to buy a marker and buy some signs. But yeah, I mean that is another way to get into it. And you can even get more creative and like actually buy investment property with no money down if you found a partner, right? So let's say you find a deal, maybe you have decent credit, but you don't have any cash. Then you can go to somebody that's got cash with bad credit and be like, look, I found a nice little investment for us. The bank's gonna give me the loan. I just need you to give me the money.
We're partners now.
We partners, right. So technically, you went to that deal with no money down because you got somebody else's money
Jerry
on the
Jones.
deal.
So this is this is my last question. So I follow you, of course. I follow you because, like I said, you're inspiration. And, I'm not afraid as a black man tell another black man you're
Appreciate
inspiration.
that, brother.
You dig what I'm
Black
saying?
love. About time.
You dig what I'm saying?
What COVID did?
We go for that. We gonna get a hand clap for that. But anyway,
You almost there.
I seen that you had a meeting in Atlanta with other big time investors.
That meeting was powerful.
Right?
Yeah.
So what I want to do, I want to pick your brain a little bit.
Okay.
I want to know what went on in that meeting.
Yeah.
And so, so the
speak
viewers
on
can
it?
understand
Yeah.
a little bit. I don't say everything, but
No.
something.
We can speak on it general, because
Okay.
the whole purpose of that meeting was us realizing that, we're in our own rights, in our own little lanes. We are what other people deem to be really successful, but we had nothing done collectively, and so we all connected just through social media, literally. And so like the oldest brother there, Carmichael Johnson, Carmichael, he's in Atlanta, and he
32 million.
Yeah. At 32 years old, he's worth like $15 million, just from doing residential developments in the city.
Wow.
Like building subdivisions and stuff like that. And even after that, he figured out ways to like package up foreclosed homes and sell them to hedge funds, like like big groups of properties, 20, 30, 100 properties at a time. And then there's another very impressive brother named Brandon Rule from Milwaukee, Wisconsin, 32 years old. He's literally got about $100 million worth of apartment complexes he's building right now.
Wow.
So it's just people like that. And other ones, some of them were still like in wholesaling, like some of the top wholesale people, like Max Maxwell, his partner was there. Or some of them were just really good at internet marketing, right?
Okay.
So that they sell a lot of training courses and all that kind of stuff. But we just realized if we can take everybody's talent and everybody's expertise and kind of pull together, then we can kind of make like the first African American development conglomerate.
Right.
Dope.
Right.
Yeah.
That'd be dope. Yeah.
Yeah.
So you guys would be a next what is it, like Caldwell Homes or
Exactly.
Village Builders or what's the big one?
Keller
Keller Homes. Yeah.
Remax.
All those big entities, that do big deals and do a lot of stuff.
So give us a gem, one gem. I don't want to give us everything because I know you got to pay for that.
One gem.
Give us one gem what went on in that meeting.
Let me see the one
thing that blew your mind.
The thing that blew my mind the most, I would say, is that everybody in there had a really big failure.
Okay.
Like had lost something. Like
respect.
Yeah, everybody had. I'm probably one of the smallest losses. Some of them had multi-million-dollar losses, but they didn't quit. And once you realize that you can take something from just an idea and bring it to fruition in reality, and you realize that it's only a few things you need. You need the knowledge and experience.
Yes.
You need the opportunity, and you need the money. Then you realize, okay, if I lose the opportunity and I lose the money, I can still go out and find. I got the knowledge. I got the knowledge, so I can go back around and I can find, and I'll start over. But exactly. Right. So then you can go find an opportunity and find somebody with a different set of knowledge and experience, and then go get the money. So as long as you realize, no matter what you're doing, no matter what industry you're in, that success triangle is what moves everything.
Okay.
One last question. That was a great question, bro.
Go ahead, brother.
You on your shit tonight. Hey, look. You got my link Chris now.
He did his homework.
Hey, well, one question. I think this is very important. How old are you?
37.
37. Single?
Yeah.
Yeah. Ladies, that's for y'all, but that ain't my question. Hey, your 20-year-old self, right now at 37, what would you go back and tell your 25-year-old Chris or 20-year-old Chris right now? What you know now, what would you go back and tell yourself?
I would say, Chris, number one, don't be afraid to fail. Like forget about what school's telling you about the people that's only right more than 90% of the time or the best ones. Like be okay with failing a little bit more, because the person that graduated with a C or D average got the same diploma.
Yes.
And they probably might be just as successful or more successful than you right now. And then number two, I would say get around people that have done whatever you're trying to do, and do whatever you can to get them to give you information. Like give them time, sacrifice money if you have to, whatever. But don't try to figure it out on your own. And don't surround yourself with people that are just like you. Even though they're all ambitious, even though they all speak the same language, you got to have somebody that's been further along, that's bumped their head more, that's actually done it and actually had some success with it. And that's gonna save you a lot of time and stress and money, on trying to get to wherever you're trying to go.
Dope. Appreciate
Chris, I appreciate that, brother. Look, tell the people where they can find you, because I know you everywhere. You're busy. It's hard. Like this for the fans. Look, I'm gonna tell y'all. It took me 2 or 3 months to get Chris on here. So look, I'm glad he came. So Chris, where can the people find you?
Man, okay, so number one, my Instagram is investor. Just type in my name, Chris Senegal. It's going to pull up _INVSTR. YouTube, same thing, Chris Senegal. Man, honestly, if you just type my name in Google, it's going to pull up all of my social media.
Okay.
Those are the best places to find me. If you want to get real estate education, learnfromchris.com. Learnfromchris.com. I have basically a membership that starts from scratch, and it teaches you everything from the basics, from like the realtor side to being a landlord to fixing houses, flipping houses, to new construction. Everything's on there. So that's the basic ways to get at me.
Man, look, I appreciate you coming to the show, man. Look, anytime you want to come up here and spread some of this information, some knowledge, hey, we got it, man.
Hey, Bill Oliver and Twist conversation, man.
Okay, yeah, that's right. On location, you're right. So look, this is a culturally distinct podcast. Look, this is your boy DJ KO.
K Jack in the building.
Oh, TV from the set.
I'm glad you guys viewed in. Hey, look, much love, much peace. Holla at y'all later.
Peace.